Hey guys, I'm so excited, y'all. It is Wednesday, June 17th, and it's actually 6:34 p.m. It's late. Market closed at 4, well, 5 for futures, and then it opened back up at 6. So, as you can see, we had a good day. Well, before I get into the day, I figured let's go over the basics because I haven't even processed this. Like I haven't even processed this. So before we process this, I'm gonna try not to make this video too long. But I did say I was gonna make a video going over these steps, and I think that's what I want to do first, and then we can recap today's trade because this is crazy. This is the biggest trade I've ever taken, ever. But again, I'll tell you how we got there. So, let's see how we gonna do this. We just need a blank spot. Okay, so we're gonna use TradingView. I haven't used TradingView to draw before, so I'm curious to see how this is gonna turn out. But anyways, let's start over. So with the basics, market structure. So market structure again is just a fancy word for I don't know, I need it back that big. I don't even like that. Hold on, y'all. So market structure is also trend. So there's 3 types of trends. There is a bullish, which is a uptrend, price going up. I swear I don't type slow. I swear I don't. It's these nails, y'all. Okay, sorry. 2, we have a bearish trend. That means price is going down. Please stop making me look like I'm crazy. Okay. Price is going down. And then we have a consolidating or a range, which is price is moving sideways. So it basically looks like a barcode. Those are our 3 different types of, what was that? Let me stop because I get to doing stuff that's unimportant. So starting with a uptrend, right? So that's our first type of market. Another word for it again is a bullish market. It consists of higher highs and higher lows. Higher highs and higher lows. So what does that look like? That would look something like, I hope this is it. It will go up. So it has a low, a high. How do I keep it on? Please don't do this to me. We have a higher low. Then we have a higher high. Then we have a higher low. And then we have a higher high. So one thing about price is it's never going to go in one direction. It's always going to have things called pullbacks and stuff like that. So for example, we have this low here. We have this low here. This low right here is higher than this previous low. Same with this one. This low here is higher than this previous low. That's also the same with the highs. This high here is higher than this previous high. This high here is higher than this previous high. So pullbacks are price moved up, then it pulled back to an area. All right. That's a little too thick for me. A little too thick. Okay. So price pushed up, pulled back to an area. Price pulled pushed up, then pull back to an area. That is called a pullback. So these lines here are pullbacks. The ones that come back, these are pullbacks, right? They always come back to an area, then continue higher. So this is an example of a uptrend. Y'all gonna have to work with me because I gotta see stuff. It gotta look nice. Okay, anyways. So yeah, this is an uptrend. It has higher highs, higher lows, higher highs, higher lows. Now, the second type that we have is a downtrend. Or another word for that is a bearish market. So you'll hear things like, oh, bears are in control, stuff like that. That is a downtrend. So a downtrend consists of lower highs and lower lows. Lower highs and lower lows. So what does that look like? That would look like, so we have a high, we have a low, we have a lower high, then we have a lower low, then we have a lower high, woof, and then we have a lower low. Golly. Okay, so again, in a bearish market or in a downtrend, we have a high, we have a low, we have a lower high because this high is lower than this previous high. Then we have a lower low because this low is lower than this previous low. And then once again, we have a lower high and then a lower low. Now, in a downtrend, the pullbacks happen here. So we have a high, a low, then price pulled back to an area. This is a pullback here. Again, then price continued down, then it pulled back to an area. Those are pullbacks. So those are naturally going to happen in any market, whether it is an uptrend, a downtrend, or even a range. But in a range, you can't really tell because price is moving sideways. So let's go ahead and talk about the last one. So the last type of market structure or trend is a range or a consolidating market. That's another term for it. Basically, price look like a barcode. It has equal highs and equal lows. So equal highs, equal lows. I put these letters because you're more likely to see these letters than people typing out these actual words. So just get used to them. Equal highs, equal lows, equal highs, equal lows. So what does that look like? That would look like, so price went up, then price came down, then price came up, then price came down, then price went up. And it's probably not going to be like equal all around, but you get the point. There's no clear direction. So this is what a consolidated market look like. It just looks like price is moving sideways. There's no clear direction. Price isn't moving up or moving down. It's moving sideways. So these are the different type of trends or a different type of market structures that we'll see in the market. So going back to today, let's start on the daily. If we look at the overall trend, If we look at the overall trend of this market, we see that price is, let's just start here. We have a low, we have a high. We have a lower high because this low is higher than this previous low. Then we have a higher high because this high is higher than this previous high. Then we have a pullback. So this low here is lower than this previous low. So for this example, this would be a downtrend. But in order for this market to continue in a downtrend, it has to create a lower high. But what happened? Price moved up, created a higher high. So now price is still moving up. We do have a pullback happening here, but in order for price to want to push lower or continue the downtrend that it started here, it would have to create a low lower than this. But in order for the price to continue an uptrend, all it has to do is create a higher low. So anything higher than here would be a higher low, and then it can create a higher high. That's what that would look like. Let me see if I can zoom in. Oof, not that much. Hold on. Let me see. There we go. Let's try something else. So for example here. Ooh, no, undo that. Okay. For example here, we have a high, we have a low, we have a lower high, we have a lower low. So this would be an example of a downtrend. Right? And then let's do this. This was actually a perfect example. We can even just focus here. This is an example of a sideways market because price isn't moving in a particular direction. It moved up, it went sideways, it moved down. This is an example of a ranging or a consolidating market. So those are the different examples on a actual chart. That's it. That's step one. So when you go into the market on a normal day, the first thing you want to look for is the direction of the market. So for example, if we were doing our analysis for this morning, I might be able to walk through this as can we zoom out? Can we zoom out? Here we go. Okay. So I'm gonna go to I'm gonna do the 4 hour. So coming into the morning, let's even start with yesterday. We had price was here originally, and then it created an all-time high, a new all-time high, and then it dropped. So coming into the morning, I know price is on a downtrend because one, it broke this previous low and created a new low. And this is for day trading. This is not me looking at the overall market for swing trades or anything like that. This is for a normal day trading like analysis, top-down analysis. But it's going to be the same across the boards, whether you're swing trading, you're just looking at a bigger picture, rather than day trading, you're looking kind of at like a more zoomed in picture, whatever. So yeah, so price is, what was I saying? Oh, see, I was about to get into the whole top-down analysis. Okay, yeah. So price broke this low. So price broke this low, created a lower low. So we know in a downtrend, price is going to pull back to create a lower high and then continue down to create a lower low. And that's exactly what happened. But this happened today, so we're just going to act like this didn't happen. And if we were just looking at this, again, price broke this low, created a new low. We know price will pull back to an area. We don't know exactly which area. But we'll be like, okay, price is currently on a downtrend. That will be our analysis, and that'll be the first thing we do in the morning. Price is on a downtrend. Simple. I hope that's simple. Okay, cool. So now let's get back to the second one, which is indication or breaker structure. So I really trade price action, I'm gonna be honest, but I do use ICC, which is indication, correction, continuation, and I also use supply and demand, which is supply and demand. So I'm going to go over both because I feel like they're both important. And I'll kind of explain price action as I go because it's not really much to explain when it comes to price action. It's just watching price move and react. So let's go over breaker structure because that's the second thing we'll look for. So what is breaker structure? A breaker structure is when price indicates that it wants to continue or move in a certain direction. So for example, in an uptrend, a breaker structure would be this. So price started here, it moved up. Price started here, it moved up, it pulled back. In order for us to know that price wants to continue up, it has to break this structure. So let me add that. BOS or indication. That's another term you might hear. So this, when price breaks this high here, that is an indication that price wants to continue up. It's that simple. When price breaks this high here, that is an indication price wants to push higher. That's it, y'all. As you can see, it pushed higher. As simple as that. So let's do a downtrend. So price is here, it went down, it pulled back. In order for us to know price wants to continue lower, it needs to push below here. Ooh, I can't move that under because that's gonna bother me. Hold on, y'all. There it is. Okay, cool. So in order for price to indicate that it wants to push lower, it has to break this structure here. It has to break this previous low. What did it do? It broke this previous low. It pushed lower. That's it. A breaker structure is just price indicating that it wants to either push higher or push lower. That's it. Now, where it gets confusing is, and it's not really confusing, you just have to keep in mind, when price is in a consolidating market, there is no direction. There is no uptrend. There is no downtrend. So there is no real breaker structure. This is when people start to get faked out. Because, for example, and I did it on purpose just so I could show you. We have a low here. We have a high. We have a higher low. So in our head, that's like, oh, okay. In order for us to know price wants to push higher, it has to break past this previous high. It did not. That means there's no breaker structure. In order for price to let us know it wants to push lower or whatever, it has to break this structure here. It did. But then what happened? It pushed higher. So this is in a consolidating or ranging market. There is no direction. So these are like little areas where you can get faked out. What you would wait for in a ranging market is what we would call a breakout. I am getting off track just a tad bit, but for the people who can handle this extra little tip, in the ranging market or consolidating market, what you would want to wait for is something called a breakout. So, and y'all probably seen me do breakout trades multiple times before. I probably haven't said it like, oh, breakout, but I most likely have done it. So what that is price actually, let's say here, price created this thing and broke out. Whoa, that was skinny. That's a breakout. This is now letting us know price broke out of this range and it wants to continue higher. Then again, this is just an extra tip. You could either get in on the breakout, which I wouldn't recommend. I would wait for the pullback for price to retest this area to make sure it doesn't want to fall back in. Because if it fall back in, you don't want to be trading in this ranging market. You want price to pull back, and then you would wait for, you can get in here at an entry if it holds right, or you'll wait for the continuation. That's if you get an aggressive, or you'll wait for the continuation higher and then actually follow your steps and get in. But this is what a ranging market would look like, and you wouldn't get in a ranging market until it breaks out. It could either break out in an uptrend or it'll break out in a downtrend. But there's only 3 types of markets. Whew, that was a lot by itself. I hope that made sense. So let's look at it on a regular chart. So today, let's see what happened. We're still on the 4 hour. Let me do 1 hour so we can get a little more candles. Okay. So again, we have this high up here. We have a high, then we have a low. It broke this structure. So for me, in my head, I'm like, okay, this is the indication that price wants to sell. So it created a low, created a lower high, created a lower low because this structure pushed lower than this previous low. So again, indicating that price is wanting to continue lower. Price pulled back. And when I came into the market, I said there's no trade until price either creates a new high, because I wasn't trading in this area. This is a no trade area because you see how price was moving. There was no specific direction. So there was no trade unless price create a new high, which would have been a breakout to the upside, or broke this structure here. Well, no, on a smaller time frame, there was another structure that I saw. We'll have to zoom in, but we're not there yet. There was another minor breaker structure in here that I saw that I got in. But for the sake of this example, let's just look at this market structure on the 1 hour. So there would be no trade until price broke this low. So I wish I could take this all off without messing my stuff up. I can't. Imagine this stuff isn't here because it probably looks confusing. Can I do another layout? Hold on. Okay, never mind. I can't. At least not right now. Anyways, yeah. So a breaker structure to the downside didn't happen until here. So this trade wouldn't have happened until this candle happened. And as you can see, it pushed all the way here, but it broke this structure. That indicated price wanted to go lower. And what happened? Price pushed lower. That's a breaker structure. That's the indication. The indication was this candle here. It pushed, it broke that structure. That's it. That's literally it. Same thing for an uptrend. We wouldn't have gotten an uptrend until, let's just use this example of what we see. So if we wanted to get in for buys, for me, there wouldn't be a buy until price breaks this structure here. Until price can push above here, this previous high, there's no trade. Price needs to indicate it can push higher than here in order for me to know, okay, buyers are in control. But until then, it's all sales. That's it. That is the breaker structure. That's it. So that's the second step that we look for. So now that we got our breaker structure, now we wait for the correction back to the zone. So what is that? What does that look like? Let's zoom in. Now let's break down the trade, because at this point I don't have to really draw anything. It's just a matter of showing you. So I'm gonna show you a more simple trade because that one got a little, yeah, we're gonna get into that later. We're gonna get into that one. Now, do y'all see the difference? Do y'all see how, okay, y'all see the type of day I had? This is a normal trading day for me right here. Matter of fact, this is a normal trading day for me right here. This. So let's get into, whoa. What? We're not going over that one. We are going over, whoa, hold on. Hold up, y'all. We gotta find the trade. What trade is this? What day is this? Hold on. Where's my stuff at? There we go. Okay, let's do, no, not this one. I mean, we could do that one, but I didn't record that one. That one happened yesterday evening. This one happened yesterday, market open. So let's go over this one. Okay, let's go over how I caught this trade for this example. So again, we have a downtrend, price pullback. No, this is not, this is supposed to be here. Okay, yeah. Okay, so for this example, price pushed down, pulled back, broke this structure here, pushed down, pulled back, broke this structure here. So a zone would be this. This rectangle represents my zone. The zone is the previous candle of the opposite color. So, for example, we know that we're in a downtrend. Checked off. We need price to break structure. So what would that look like? Price broke. This is a previous low. We need price to indicate that it can push lower than here. Whoops. Because remember, it happens at the pullback. Come on. What is going on? Okay. Okay, anyways. Yeah, so we need price to indicate that it wants to continue this downtrend by creating a lower low. What happened? This candle pushed lower. So the zone that this candle pushed out of was the previous zone of the opposite color. So in a downtrend, that is a supply zone. This is a supply zone, right? Because price is selling out of this zone. In an uptrend, it will be called a demand zone because price is buying out of this zone. All right, so this would be a supply zone. Price pushed out of this previous zone, this area. I hope that makes sense. Okay, cool. So for the correction would be price coming back to an area. So if you guys remember, I said one thing price is always going to do is pull back. So we have, for an uptrend, we have a low, we have a high, then price pulled back, right? And then it continued. Same with a downtrend. We have a high, a low, price pulled back, and then it continued. So right now we're waiting for that correction. That's the pullback. So what does that look like? This is the pullback all the way back to this zone. We want the zone to be tapped, not almost tapped, not invalidated. We just want it to tap. Now, depending on the type of trader you are, depending on top of the nervous system you got, you can either trade aggressively. That would look like price literally tapping the zone. So let's zoom in. I don't even think I got in here because it's not even highlighted. Hold on. I got in on this candle, if I'm not mistaken. I feel like I got in. Yeah, I think I got in on this candle. I don't remember. I got in either on this candle. I got in aggressive, so it had to be this candle. Anyways, so for example, for me, as soon as this candle pushed up and tapped the zone, I got in. I literally got in the trade. That would be aggressive. Conservative would look like price came in, tapped the zone, closed outside the zone. So for a conservative trader, the price didn't close outside the zone until here, because in a selling candle, price opens at the top and closes at the bottom because price is pushing down. In a buying candle, price opens at the bottom and closes at the top because price is pushing up. It's buying. Selling, it opens at the top, closes at the bottom. So for a downtrend, we were waiting for the close of the candle. That did not happen until here. So for a conservative trader, their entry would have been here at the close of this previous candle and the open of the next candle. That's conservative. Safe, or another conservative, would have been this. And this type of conservative is kind of like half aggressive, half conservative. It just depends. But this would be momentum coming outside the zone. So we see the tap. We're like, oh, okay, now we just need the price to close. But let's say we see price came all the way here, then it started pushing. And now it closed in the zone, but then it kept pushing. We would get in at the momentum, price pushing outside of the zone. So all of this pushed out and kept pushing, we would have got in. That's another way to get in conservative, which to me is better sometimes, depending on the trade, than regular conservative, because look how far we are away from the zone. This is the zone. We got in here. That's pretty far, because if it wanted to still go back and tap this zone, we would have to be able or be willing to sit in all of that. So you want your entries to be close to the zone as possible. So again, aggressive is literally as soon as it taps. You're willing to sit in all the pullback. That's aggressive. Conservative is close outside the zone or momentum coming out of the zone. This could be, again, buys or sells, just momentum coming out of the zone. So for this example, is sell. So it's momentum coming out to the downside. And then a safer entry is waiting for, did I do safe? I don't think I did. So safe. So again, conservative closes, you get in here. Safe would be a push above this candle. So when price start pushing above this previous candle, we would get in. So safe would start here on this candle. That's safe. But again, look how far we are away from the zone. So there are different risks when it comes to the different type of entries, but that's what it is. So aggressive, I consider, is high risk, but it's also high reward. Conservative is, it's conservative. And then safe is safe, but it don't always have the highest reward. And And it's also not as big of a risk because you don't have to have your zone all the way here. You can make your zone the previous candle or, smaller, like what's safe for you basically. So yeah, those are the type of trades. Now, if this can move back, that would be great. Because where was my entry? It was right here. So I got in aggressive. I got in at the top. I was willing to sit in this whole pullback or this whole zone. If price ended up pushing past here, I would have got out the trade. It did not though. It came up. It had my heart beating. But then look. So high risk, high reward. That's aggressive. That's literally it. Like I said, if price don't tap your zone, if price don't hit your zone, or if price invalidates your zone, like it comes through here, pressure, and then invalidates, there is no trade. You do not enter the trade whatsoever. Either way, it's a risk. Because like I said, I got an aggressive. This candle could have took me out. I don't know that because I don't know what's coming next. But I'm assuming because of my trading checklist, I know that I'm in a zone. Price came back. Price tapped my zone. I got an aggressive, and now I wait for the continuation because I'm following my downtrend. It made a low, it made a lower high, it made a lower low, it made a lower high, so I'm expecting a lower low. That's it. That is a correction. That is a zone tap. That is how you get your entry. Now, as far as your stop loss and take profits, I use what I call key levels. And those are just specific levels in the market where price has done something. Like, for example, let me go back to the 1 hour. Okay. I'm going to use these 3 lines for example. Anytime you see these lines, it's more than likely an all-time high for my charts. It's just previous all-time highs. But as you can see, a lot of things happen at these areas. I don't want to trade near these areas. I don't. Because look, it's more than likely consolidating. I want to trade between these areas where I can catch moves like this. Moves like this. I don't want to trade at these levels. So I aim for these levels when I'm in a trade. So let's go back to our example. And I'm gonna let y'all know, me personally, I aim for a little 1-to-1, 1-to-2, and I get out. Today I tried something different, but y'all see me. I'm talking about some trading level to level. This level isn't till down here from this previous level. I'm not saying in all that, but that's just an example. That's just an example. So for me personally, I love using, it's on TradingView too, but I love using this thing called, let me see what it's called. It's called a short position or a long position. So longs is buys, shorts is sells. So for me, I put it on, I aim for a 1-to-1. Once it hits my 1-to-1, I get out. For example, this one, I aim for a 1-to-6. Once it hit the 1-to-6, I got out. So that's the way I do it. Some people do calculate. You can do it like that. Another way I do it is I aim for these levels here. Once it gets near the, like for example here, for me, this was a level because I know this was a gap. I didn't know how price would react to the gap. I didn't know if price would come into the gap, continue. I didn't know if price would tap it, reverse. I didn't want to be a part of that. So I knew by the time price got to this gap, I wanted to get out. That's exactly what I did. So that would be another example of, doing your stop loss and your take profit. But like I said, me personally, I use these position tools. Like I said, TradingView has it too. It's called, girl, I don't even know what it's called. Let me see. It's called something. It's on here somewhere. I don't use this, but I know they got it. They got it. Do I need to do my due diligence real quick? Hold on, because I don't like I don't like leaving people on a cliffhanger. Hold on. Where is it? I'm not gonna lie to y'all. I don't know how to find it. It's on here somewhere. Is it this? What is it? Is it this? Oh, there you go. Long position, short position. So that's the same tool. You click it, you think it's going one way, you do your measurements of how much you want to risk or whatever. And yeah, it tells you how big your stop loss is. It tells you how big your reward ratio is. Like, yeah. So I love that tool for doing that. It takes the guesswork out of it. But that's it, y'all. It's that simple. It's that simple. It's easy. I didn't say that. It's simple, but it's not easy. So let me see how long this is. Golly, 40 minutes? We're going to go over this trade in another video. We're going to go over this trade in another video. I just wanted to break that down. I hope it makes sense. You can DM me if you have any questions about it, but I'm going to leave it there. We already 40 minutes in. I will see y'all in the next video going over my biggest trade ever. Okay, bye.